Hey traders, this is Blake Morrow, and you are listening to an interview with Traders Summit, and I'm super excited to bring you this interview with Beat Nussbaumer, and I am excited to have you here.
Hi, Blake. Very nice to see you, and thanks very much for having me. Really excited to be here.
I'm excited to have you, and I'm excited because I recently just met you over the last couple of months, and it's interesting when you're in this business and you're in this business for over 20 years. The circles get a little smaller and they get a little tighter, and it's, to me, it's really surprising that I hadn't met you yet, and so I'm super excited to introduce you to the Traders Summit traders, and so people get to learn a little bit about you and what you do. So tell us a little bit about you. I know your company is MacroBeat, but how do you attack the markets? How do you see the markets?
To be honest, as a brief history, I obviously grew up as a spot FX trader, worked for all the big banks, worked for the big macro shops like Goldman Macro Prop. So I kind of came out of a real trader pedigree type of situation, moved on to the sort of more global macro stuff. And so I founded MacroBeat around 2015 when I left the city. Trading my own money first, then I was lucky enough to have investors that were interested, so I'm sort of managing money for high net worth individuals as well. And it's really this sort of mixture of being a trader or a born trader on the one hand and being a macro guy on the other. So I did find that really helpful in what I do now in attacking the market. And so a mixture of, if there is a theme, I'm trying to be on the theme, more on a, I'm sort of macro-driven, narrative-driven positions. And on the other hand, if there is just no story, I kind of manage to sort of slip into the sort of trader seat, not shy of trading the day or multiple day trades. So it's kind of a mixture between going in and out of macro or more short term. Or I even have maybe macro position on the side that I want to keep while I sort of trade the weekly narrative or whatever. And this is just a sort of chip and charge, keeps the bank balance happy. And it's just one way to as well sort of accumulate a bit of money if you, on the trading side, to really sort of reinvest in the bigger ideas you have. So it's easier that way. And it's sort of how I grew up. And I sort of implemented that into my trading too. And everyone that sort of is interested on, when I manage money, I say, this is what I do. I never have a position that is opposite of my view. So I only trade the market from one side. So if I'm bullish, I'm either long or flat, or bearish, short or flat. So I never try to be cute.
Yeah.
Sort of trading both sides, because I learned over the years that's just not good for your brain, right?
It's interesting that you point that out, because I'm very much in the same camp. But you have an opinion, and it's hard to trade opposite of your opinion. And I know a lot of traders do that, but I think your approach, by having an opinion, you have a theme that you're trading on, and trading in that direction, it's going to be easier on your psyche when you're trading.
Oh, absolutely. To be honest, there are moments when you go, like when you see, okay, it's going to turn. Now, let's say like after the Fed move, you had this sort of few days dollar rally, risk sell off. And I saw on all my charts, everything is going to turn, at least for the short term, right? So all I do at this time, and I remain disciplined, all I've done is I'm cutting existing risk back. I always keep some, as long as I'm bearish, I'm short. I'm just less short. But I would never in a million years go like, now it's going to bounce 80 points, I'm going to buy some, right? That may work 2 times out of 10 or 3 times out of 10. The other 7, you screw your trade.
Yeah.
Because then you kind of long, it fails, goes down, you get stopped, and you're not sure, right? And that just used to annoy me so much in the past that I just say, you know what, the few pips you make on a counter trade, if you look at the whole picture, that you stay in the move if you're right, and you kind of have it when it goes, that is what really makes the money at the end. It's these counter trades. I think it just really messes with your mind, I think.
It's interesting as an American, and being a retail trader in the UK where you're at, it's a little different, because you can have positions, you can have opposite positions, and you can we trade in the United States FIFO, so we've really had to, as an American, we've had to really come into that frame of thought. It's like, if you have an idea and you're going to trade that idea, you kind of got to go in the direction. If you're going to go opposite direction, you have to trade some sort of cross rate, and it does screw you up as a trader.
Yeah,
I think,
yeah,
you know, as a trader, just having conviction and an idea, it really does help. And it seems like that's the way that you really attack the markets.
Yeah, to be honest, I think, you know, reality is we all know trading isn't easy.
Yes.
So you have to try to make it as easy or as sort of easy for your mind. And so you have so I have a very iron discipline of framework, trade planning. I know exactly where I go in, I know exactly where I go out. So I don't really worry. Yeah, I know I get some trades wrong, but you know, as long as your hit ratio is okay, you win 7 out of 10, you lose 3, fine. As long as you have a discipline on risk management, you should actually lose less on the 3 than what you make on the 7. So that means there should never be a moment in your trading day that you should get stressed. Because yeah, we get trades wrong, we know that. We have to embrace losses because that's part of the game. But if you have a regime, you know, I already know before I take the risk how much I'm going to lose if I'm wrong. That just keeps me very, very calm. Right? So there's no stress.
And that's a key takeaway for those of you listening at home. And it's something that, you know, we try to stress ourselves. And this is like, you take a professional like Beat, this is what you should be thinking before you take your trade. What risk are you going to take? And that's a huge, you know, golden nugget for the traders at home.
Yeah, to be honest, I see that as on the side, I do tutoring as well. And it's just amazing to see that people that trade don't actually, even know their risk, right? Most of them are too big.
Right.
The stress comes in when you sort of buy and it keeps dropping and you kind of have no answers and you just trigger the stop, but it gets too expensive. That's not really smart trading.
Of course.
And that's when the stress is coming in, and you know yourself, you've been trading long enough. When the stress comes in, you start to make mistakes.
Absolutely. And then you're focused on all those bad trades and you miss so many of the good ones.
Yeah, exactly. So really it's an iron discipline, you know, the way I work. And like I said, what definitely helps is this sort of combination of macro, short term, slipping in and out of the role, because I've done both. I mean, trading now, shouldn't say, but probably soon about 38 years. That may give the age away now.
I would have only guessed 18 at max.
Yeah, thank you.
Hey, Pete, you know, for those of the traders at home, you know, we're going to be publishing this really pretty quickly. Just stick around because Beat's he has some trade ideas for you as we have some pretty key events heading into this week. Hey, what are some other golden nuggets, if you will, that you could give the traders at home as far as, you know, your approach to the market?
To be honest, I mean, the one thing I always come across with some of the people, some of the retail, obviously, you know, they're attracted by the lifestyle. I think yeah, I get it, right? We all, you know, want to make money. But I think you need to love what you do. If you don't love this job, it's not going to work because it needs a lot of work. To be honest, I work 12, 14 hours a day because I love it as well.
Yeah.
And so the attention you have to detail, especially as well, if you're macro trader, you want to see the market, what's happening, the news, etc. It's just ongoing, right? And if you don't love that, how can you put the amount of work in that is needed for it? The other thing I would say, what you put in is what you get out. It's really that simple. And it's probably true for many other jobs too. If you think you get away with the bare minimum, think again. The other thing I would say is, you know, even those people that may have less sort of time and follow the sort of signal services, still try to educate yourself a little bit, because at the end of the day, you want to be in charge of your own destiny. You don't want to sort of outsource everything, unless you're just in for the money and you try to find a hot job and maybe you get lucky. But it's this sort of, you know, the exciting about learning. It's an exciting job. And you see me, right? And it's many years and I'm still as excited as in my first few years. Maybe I'm just a little bit odd. But no, I think it's the love for what this job is. Yeah. We know there are good days and bad days, but it's an exciting job. And I think, you know, if you love it and you put the hours in, you're going to be successful.
Well, you know, a lot of wonderful words, and I think a lot of traders are going to take away from this. Some really important key points that you've made. We're going into a week where, we just saw a pretty big reversal in risk today. Coming into the beginning of the week of a shortened week in the U.S., we have the FOMC meeting minutes coming up here tomorrow. As a matter of fact, we're going to be heading into a period where, typically we have not only the Fed, but a lot of central banks are going to be, and a lot of, key folks will be meeting for Jackson Hole at the end of next month.
Yeah.
What's on your horizon right now? What are you seeing? I mean, I know we've seen a big bounce in the dollar and big reversal in the Aussie, and especially following the RBA this week. But what's on your radar going into the next, let's just say the next few days?
To be honest, the next few days, you actually just mentioned the key event. For me, it's tomorrow's FOMC minutes. As you know, I'm a dollar bull, I'm a Fed hawk, I think the Fed is behind the curve, blah, 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 blah. And I definitely strongly think Jackson Hole will put that thing right. The Fed minutes is probably the last event before the Jackson Hole, before we go into the quiet period of the year, where the Fed story could reignite. So now we just in that limbo. If you remember, we had a big move in the few days post the Fed, then we had the retracement, now we sort of come back. And it's kind of, the market is almost like sort of trying to put the Fed away until August, right? Because they just want to do a little bit more carry until August. And I think tomorrow could be one of these moments where, if the minutes do show there's been like heavy talk on the taper, so the tape is really coming back, I think the moves we've seen today are the moves that we're going to continue to see. I think the market has had a fabulous time for March 2020, running long risk, running short dollar. And I think that trade is just coming to an end anyway. Now, the only question is, do we get a little bit of a relief into the next few weeks because the market wants to trade these last few weeks of carry, or is it already continuing? And I think the Fed tomorrow, so funny enough, even though I usually run a lot of risk, I pared down a lot of stuff now into the moves today to kind of be flexible enough tomorrow. I know what my views are. I also know there's a very important sentence called respect the market.
Very true.
No matter what your view is, if the market doesn't want to do it, what do you want to do? So that means I won't play that side of it. I will just sort of return to a bit of short-term trading. My heart is clearly the Fed shifting gear. I think this transitory story, I think even the Fed starts to realize it's a bit dated. And I think they just have to start to do something. And I think that is the big story. And I think that is the one I continue to trade. On the side, I've been selling some Aussie CAD into the rally today. I think this sort of RBA versus Bank of Canada is still valid. I still think the market is very long of that cross from last year. The sort of divergence between the RBA and the Bank of Canada is here to stay for a few more months. I think the RBA does another review in November. RBA told us clearly that they're not going to hike in 2023, despite the market pricing in 50 basis points. So I think this whole unwind, Aussie CAD has dropped now about 7% this year, but it rallied about 25% from the March lows from last year.
Yeah.
And this is a sort of what we call the RV trade. A lot of real money guys love these sort of low wall trendy pairs. Yeah. And I think because of the divergence between Bank of Canada and RBA, there's more unwinds to come. So for me, that's just a sort of nice little drawer position to have. So I'm not too exposed to the dollar. I'm not too exposed to risk on, risk off. It's just a kind of nice trendy stuff. And on the other side, I'll be honest with you, like I said, I love to be very opinionated about my trades, and hopefully we do another interview at some point in time. But right now, we're really going into this tricky period of, if the Fed is no story tomorrow, the market might just go like, you know what, let's buy a bit of risk until Jackson Hole. But I do think that you don't want to ignore Jackson Hole. I think that's when the genie is really coming out of the bottle, I hope.
That makes a lot of sense. And, for those of you guys at home, just remember, the Aussie Canadian, as Beat just pointed out, it's a good way to avoid some of the volatility that you might see in the dollar over the next few days. And, maybe running a short Aussie Canadian, while we're below the 200-day moving average, and taking advantage of this little pop up might be a trade to kind of skirt away from that, right?
Yeah. No, to be honest, like I said, it's been a slow trade, and those who need daily excitement might not love it that much. But look at the chart, and if you just see something move just gradually one way, What is there not to love?
Right. Well, Beat, it has been, I'll tell you, based on my knowledge of you and just recently being introduced to you, you and I, from a risk perspective and the way that we look at the markets, are really cut from the same cloth. And I know the traders that follow me are going to really appreciate what you do. So thank you so much for the insights today. And I look forward to having more heated interviews with you, especially when we want to talk about some market direction.
No, that's fantastic. Thanks very much for having me. It's really great to be here. Thanks very much.
Thanks for being here, Beat. And remember, you can follow Beat at MacroBeat, and you can find his link in the description of this video. So thanks again.
Thank you very much indeed, Blake.